What is going on YouTube? It's Sang. We are back with another one. Now in this drop, coming at you guys with a couple of plays and to bring to attention before I kick things off. I'd like to help out channel by hitting that like button because it keeps the show rolling. Alright guys, it's the weekend, but you know I never take my eye off the ball when it comes to these markets because as always in this one I want to make sure you guys have the game plan as we move into next week. Now I don't know about you, but I'm loving the way the markets are moving right now. Earnings season is shaping up as expected. We've got a ton of our plays moving up, like a C Limited that I spoke to you guys about a couple of days ago. Snap as well, post up phenomenal numbers, and this is a play that we picked up last quarter in anticipation of a move up in that stock price. Now those that are yet to climb just means it's great entry for their eventual move upwards. Now to give you guys a heads up as we go into next week, it's a big earnings week for a ton of household names, okay? A lot of them are stepping on stage, like a Tesla, like a Microsoft. Now, I'll let you guys know when we have a massive earnings week like we've got coming up next week in the markets, it can cause a lot of volatility because you've got a lot of funds, a lot of capital shifting around the markets due to excitement, due to disappointment, due to speculation. So regardless of where you're positioned in the market, you're going to feel the ripple effects off the back of a high volatile week, whether that's positive or negative. I'm just giving you guys a heads up on that. Now that being said, we are looking to get very active over the next couple of days in these markets because a ton of the plays that I speak to you guys about on the regular on the channel will be posting up their earnings at the beginning of August. So I don't want you guys missing out on any great opportunities to do some last minute buys before they post up some phenomenal numbers. Now all the plays I'll be dropping for you on this one are in the buy zone. So the number you see on screen, they'll be ready to be picked up at. Because what you guys got to know is there's a ton of stocks out there in the market. Most of them are not good enough for our portfolios, and even when we land on quality plays, it's more often than not at the right price point. So over here we ensure that we get into quality plays at the right price point. That's how it maximizes our success in these markets. Now in this one I've got great long-term holds for you, got some great medium-term holds, and even got a short-term position that I want you guys to consider as we go into next week. So it's always, I've got an action-packed one for you, so let's run the first one. So we're going to kick things off here. That's ticker symbol DAC. That's the nails. Now this is our channel shipping play, and by and large they've had a good week, up 8%. But remember, we were starting from a low base because the entire market got rocked. But what's more interesting than that? Check this out. Friday we saw this one come down over 4%. You already know we call that a healthy pullback, and we always capitalize on those on quality plays. Because let me remind you, the shipping industry has gone through a major shift. That's not the biggest it's seen in history, because we're seeing container shortages, we are seeing shipping delays, we are seeing port congestion, we are seeing record levels of demand. All of that has elevated the shipping price and is staying at those types of levels. So the Daniel's balance sheet right now is looking phenomenal, and as I said before, you better believe management is filling their pockets, and there's no reason why we as smart investors cannot get in on the actions. That's why I want to make sure this one's on your radar next week in the run up to earnings. Now I've been accumulating, building my position, sitting on hundreds of shares in this one in anticipation of the rise in that stock price. Now what we want is these shipping levels to be as high as possible for as long as possible. Now although that's going to have knock-on effects to other areas of the economy, in this situation that's how we're going to maximize our returns. Now remember, this is what we call a cyclical play. So these prices, they move around. So what we want to do is be in this play for as long as prices remain elevated, okay? Now given the major situation that's going on in the shipping industry, it's not a quick fix situation. So I'm expecting prices to be at these types of levels until Q1 2022 at least, okay? So there's some time for us to be in this play, let the returns build and grow over the next couple of months and next couple of quarters. Now that being said, I want us in this play at least until $90. So there's tons of upside from that current level of 67, but I'll be giving you guys a heads up when we do exit the position. Our next one, that's ticker symbol M, that's Macy's. Another strong play as we move through the next couple of quarters, because we know retail spending is at a high right now. We know consumers have got that spending power because of that disposable income, and there's that pent up demand to shop, all playing into their favor. Now check this. We were on course in this one to hit $20, but they just got wrapped up in the volatility that was across the board in these markets. So open up good entry to get into this play at these types of levels, okay? This was once a $19 play just a few days ago. Now we're looking at a $16 play, and I like this one in the mid 16s, okay? So that's an opportunity to get in on a quality play. When I see a business going on the up and up, and we know Macy's have guided for strong numbers over the next couple of quarters. They've given us an insight into the business, made it very easy for us, but that stock price is going in the opposite direction off the back of volatility, things not related to the business. I call this an easy money situation, and over here we always capitalize on those. So I'm going to bring this one to your attention ahead of next week's opening bell in the stock market. As I say, we like this in the mid 16s. That's 1660, 1650, around those types of levels. You guys make sure you get entry on the play. They are going to be posting up phenomenal numbers as we move through earnings season. Next up, that's ticker symbol NIU, that's NIU Technologies. Now this is going to be a short-term play, so check this. Over the last 3 months, guys, we have seen this one bounce around in that consolidation channel at the low end of the $26 range, $27 mark, at the high end around that $34, $35 mark. And this one moves like clockwork, okay? We've seen it bounce off the low, seen it bounce off the high several times. Right now, they're trading very close to that low at $27. Now, behind the scenes, this is a business performing well, okay? Strong numbers, growth year on year, month on month, they're doing well, and they've got a reopening element to them with their two-wheeled vehicles, okay? So in anticipation of a bounce from these levels, I'm bringing this one to your attention. So switching gears, we've got ticker symbol DIS, that's Walt Disney. Now, not only is this a good reopening play, and as things open up again, we should expect some financial recovery on that side. This is a streaming play as well, and that's where we're going to drive serious value for us as investors over time. They've already showcased a little bit of their potential, but there's a lot more to come when it comes to scale, acquisition, and reputation, and streaming is the way forward. So to make sure this one's also on your radar as we go into next week. Now, quick mention on the charts, they are sitting in the sweet spot, guys, at $176. This is a line of support, strong line of support that we've seen over the last couple of months. This play is getting ready for the upside off the back of a good catalyst, and that could be some strong numbers as we go into earnings season. So to make sure this one does not slip off your radar. Now, the way to win with this play is to take a longer term mindset. What you're sitting on is a play with a phenomenal brand, and they're moving in the right lanes, okay? Now, some of you guys, you're missing cornerstone plays in your portfolio. When you build a house, you got to build from the foundation up. Some of you have tried to build from the top down, and you've seen the chaos it can cause. You've got to make sure you have your foundation, your cornerstone plays, and this can act as one of your longer term drivers in your portfolio. The next one I've got for that ticker symbol GRWG, that's Grow Generation. Now, I saw this price, $39, couldn't resist the opportunity to bring this one to your attention ahead of next week's opening bell in the stock market. Now, Grow Generation is still moving like clockwork for us because they are still consolidating. That is, they're moving in their channel. So check this out. Back in March, we saw this one drop down to $37. That's the bottom of the channel, around the mid 30s, $37 to $35 or $34. At the high end of the channel is $55. So over the last couple of months, we've just seen this one bounce around in that channel. $55 down to the mid 30s, back up to that $55 mark. Now, standing $39, they're very close to the low of the channel, the bottom of the channel. So it's a great price point to get in on the play. Now, we've seen several plays break out of consolidation every single week. Some of the most recent ones is C Limited, that some of you guys passed over. Another one is Snap. We saw them break out on Friday. You guys, some of you overlooked that play, so to make sure you get in on this one, don't miss out on another one of our plays that will break out. Now, I'm going to talk to you guys about what's the biggest reason, or one of the biggest reasons why plays break out of that channel that they're in, and it's earnings, guys. It's an earnings surprise. Now, this is a play set up well for an earnings surprise because at the low end of the channel, the market is overlooking their potential. And we know just over the last couple of days, they've opened up 2 new retail outlets. So add that to everything they've done this year. It's looking like they're posting up solid numbers. So they're on course for a street surprise, and you could see this one move to the upside. So I just want to make sure you guys get in on the action on this one of a quality play at that $39 level. Now, I'm going to put you guys on a quick bit of game. All of your plays, I say you should allocate a position of your holding to sell short term, okay? So with me, 25%. I've got 25% in my position of Grow Generation. When this one moves up, whether it's that 15, 20% moves to that top of the channel, that $55 range, I'm selling out the 25%. I'm leaving the 75% in to run because it's still a long-term play, phenomenal long-term play, because management are just going to continue to scale, grow, open up those retail outlets and push this one towards that $1 billion in revenue mark. But You guys know when these plays move up, what they'll do is they'll pull back, then they'll consolidate. You might see them pull back again, go into an oversold position before they move up. So along the journey, guys, good opportunity to take those short-term wins before the market takes those returns away from you. Now, as always, guys, I'm excited to kick off a brand new week with you in these markets. So those are the plays in focus and the moves we're going to be making with. So if you rock with the channel, you know what time is. What's your opinion on the future of travel companies, from cruise lines, specifically Carnival, Royal Caribbean, to airlines, American Airlines, United Airlines? Surely they're due to bounce back long term, although it'll be a journey. Do you hold in any of them yourself? Alright guys, so let me break this one down to you. Now yes, over time, travel plays are a good bet. Got to realize there's pent up demand. Travel industry isn't going anywhere. But there's a lot of headwinds in the industry right now. We know there's a Delta variant causing havoc, causing a lot of volatility in these plays. Also, from a financial standpoint, these plays, they're way down, okay? Depressed levels of earnings and revenue numbers, just given the whole situation. But I want to introduce you guys to the concept of opportunity cost. Anytime you guys approach an investment to put your money in, what you're doing is you're having an opportunity cost of putting your money into another play that could potentially perform better. So you'd never want to really put money into a play that's going to be idle if you've got a great opportunity just staring right in front of you. That's why I don't give too much airtime on the channel to travel plays, given all the volatility and shake-up that's going on at the moment. Now, for completeness, every now and then I might throw out one for you guys to keep it on your radar. But as I say, there's a major opportunity cost from jumping into another play that hasn't got any headwinds, that the price level is attractive and the business is firing on all cylinders. It makes way more sense to just go and invest into those plays, because over a couple of months' time, the travel space is still going to have a lot of turbulence, and these plays are going to consolidate even more or even come down from their current levels if there's additional headwinds and things that rock the industry. So that's an opportunity cost of jumping into a play like the ones that dropped for you on this radar that have 20, 25, 30, 35% plus available returns for you guys over the rest of the year. Okay, so just remember, anytime you're approaching a play, you have an opportunity cost of jumping into another play that could outperform. So that wraps up for this one. If you got any questions for me, drop them down below and I get back to you. I want to say I appreciate you guys. Now on your way out, do light up the comment section for me. If you're new, join the movement, and I'll catch you on the next one.